Well, look, as we've been saying, any country that goes deeply into artificial intelligence needs, in fact, just has to have lots and lots of cheap energy, gigawatts of it. And large transmission lines are needed as well to get power to the server stacks. But that's where a bit of Australian ingenuity just might come in. The Nasdaq-listed Iren Energy was started by two Australian brothers, Dan and Will Roberts. They've found a niche in exactly this space. They build data centres in the US and Canada, which are now used to mine for Bitcoin and also to power those artificial intelligence computer chips. What they rely on is cheap renewable energy, exactly what we've just been talking about, which in America is easier to come by than you might think. Ed Boyd caught up with Dan Roberts earlier this week, who was pretty pumped up about Donald Trump and his victory.
Clearly he's pro-Bitcoin, pro-AI, so there's some pretty good tailwinds coming through on that front. I think we saw this morning the announcement of $500 billion of investment into AI data centres in the United States, so it's exciting times.
Yeah, might that mean for you guys? A really big focus from the president on building data centres. How's that going to affect you?
Yeah, look, ultimately we've got a large quantity of power, so there's a big thematic around the scarcity of power and land for these new data centre use cases. So we're not talking about micro data centres that have defined the landscape over the last decade or two. We're talking about power-dense data centres, number crunching, data processing, whether it's the algorithm securing the Bitcoin network, whether it's running AI inference or training. And those facilities require an absolute large amount of power, and we're uniquely positioned in that regard.
Why are you so uniquely positioned?
We've got a big portfolio, a really big portfolio. So 6.5 years ago, Will and I established Iren, and it was on the premise that the real world can't keep pace with the digital world. So the digital world, you've got all these exponential demand drivers. And as humanity, we kind of stepped back and said, 10 to 20 years, we're going online. And during our seed investor raising, we quoted movies like The Matrix and Ready Player One. And yeah, like it's a chuckle.
Yeah.
But directionally, we're heading that way, right? We're going online, we're going into the cloud. And what that requires is just enormous amounts of power. So we saw that, bootstrap a data center business, focused on power-dense computing with Bitcoin mining, and start layering in higher and better value use cases as they emerge over time. So sitting here today, we've got the benefit of 6.5, 7 years of investment in development of these sites, where you can't click your fingers and plug a computer into a high voltage transmission line. It doesn't work. They're really big, they're really high, they're really tall.
Yeah.
The voltage is different. There's a lot of different reasons. So it takes anywhere from 3 to 8 years to go through the development process to actually step down that power to a usable voltage for computers, and that's what we've been doing for that period of time.
And why the focus on renewable energy?
Look, we just think the world's going that way. There's a couple of objectives. One is the cheapest form of power is marginal cost renewables. There's no feedstock, there's no input, there's no coal, there's no gas, so there's no commodity you need to buy. And the best thing about these data centres is we go to the source of low-cost excess renewables. So in West Texas, where we've got 2 gigawatts of capacity, Australia's total annual energy consumption is about 20 gigawatts, so that gives you an idea of the size and scale. In West Texas, there's about 40 gigawatts of wind and solar, 40.
Wow.
Transmission line to export those renewables down to Dallas, Houston, and these demand centres is 12 gigawatts. 40 doesn't go into 12. So we go to the source of all that excess renewables, monetize it into Bitcoin, monetize it into AI workloads, and obviously benefit financially in the process.
I know you've got facilities in Canada. Trump has already said he wants to put tariffs of 25% on Canadian goods from the 1st of February. Is that going to affect you in any way? You're trying to figure that out at the moment.
Yeah, look, we're working through it all. Ultimately, when we're servicing the Bitcoin network is globally.
Yeah.
We run the computers, we receive payment in Bitcoin, which we sell every day. Great business. So as far as it goes, selling AI compute from Canada into the US, that's obviously a watch in brief. We've got to work through it.
Yeah, just take us back to 6.5 years ago. What gave you the idea to get interested in Bitcoin and start this company?
Yeah, so it was multifaceted. I guess our backgrounds were in infrastructure, energy, commodities. We went down the Bitcoin rabbit hole in 2017. Gold 2.0. It's better at being gold than gold is. Scarcer, more divisible, easier to transfer, easier to divide. All the attributes that give gold Bitcoin's objectively better at, except for a track record.
And a price fluctuation as well.
Yeah, but like, how do you go from a cent 14 years ago in value to $2 trillion today without volatility? So it's done a lot of that hard work now, and back then it was obviously a little bit riskier and you had to have the vision doing it. So we were very happy to have an exposure to Bitcoin. But then the bigger picture was this digitisation thematic. Humanity's going online. The amount of power we're going to need for compute was going to be extreme. So locking up all this scarce land power, getting a head start on these really lengthy development timeframes, bootstrapping the business with Bitcoin mining, and then the ability to bring in AI, machine learning, other use cases over time was always the objective. I mean, 4 or 5 years ago, we signed an MOU with Dell at that point to start bringing out non-Bitcoin workloads to our data centers. But it was too small, too hard, so we put it on ice to stay focused on Bitcoin. So sitting here today, people often ask, 3 years' time, are you going to be Bitcoin or AI? I don't know. We've got exposure to two of the most defining exponential trends over the next decade. I don't know which one we're going to do. Which one's going to go first? Which one's going to go further? Which one's going to be more profitable? We've got the ability to toggle between based on where the market goes.
Yeah, that computing power, can you easily move it out of Bitcoin and into AI? Is it easy to do that? Yeah.
Same data centre, absolutely.
Same place?
Yep. In Canada, we have racks of Bitcoin mining ASICs securing the Bitcoin network, right next to latest generation NVIDIA GPUs providing AI training models to clients.
And just explain to our viewers the profit margins you can make mining Bitcoin with the scale of the facilities that you've got.
Yeah, we're obviously in a good spot there where cost of production all in is around 30,000 US a coin. Obviously with a market price at 100,000, there's a good margin there. On the AI side, we're seeing gross margins on the hardware well in excess of 95%.
Gary Gensler is leaving the SEC under the new Trump administration. He's putting in someone that will be pro-Bitcoin and pro-crypto. New regulations obviously coming in the next 12 months. I mean, are you positive about the future?
Look, I'm always positive about the future. We're founders. It's our job. But so far as Bitcoin goes, look, Bitcoin's a commodity. There's only 21 million. You can't stop it. You can't kill it. It's going to continue to accrue value, whether people want to regulate it or not. Everything else in crypto, we have nothing to do with. I have no view on that. Bitcoin is a commodity. And even when it comes to Bitcoin, we don't hold it. We don't hold it on our balance sheet. The moment we receive it as a reward for securing the network, we sell it. We're a cash flow business. We've got an infrastructure background. It's a real asset monetization process.
I saw a story suggesting you might think about paying dividends in Bitcoin. That was last year. Is that still potentially on the cards?
Look, potentially. At the end of the day, we're receiving a large number of Bitcoin every day. If investors would like to receive some of those Bitcoin as distributions, then absolutely it's something we can look at in due course.
You put out a market update investing $1 billion into upgrading some of your facilities. Just talk us through it.
Yeah, that was only a few hours ago. So look, it's hot off the press. It's fresh. It's exciting. NVIDIA's GPU roadmap has very much pivoted from air-cooled GPUs to liquid-cooled GPUs with the release of Blackwells. The world has a scarcity of liquid-cooled data centres. As I mentioned earlier, these micro data centres that have historically populated the landscape around capital cities, they only use 50 megawatts, 100, 200 megawatts. A, they don't have enough power to keep up with the needs of this industry. B, they haven't got the expertise and experience in managing power-dense computing, let alone liquid-cooled. So the opportunity for us is to overlay installation of liquid-cooled facilities in our existing data centres and service a market that seems to be growing quite rapidly.
Dan Roberts, Co-Chief Executive of Iren Energy. Thanks so much for your time.
Thanks, Ed.